All right, let's talk about something that almost every investor secretly dreams about but rarely says out loud. You're scrolling through your brokerage app, maybe it's 10:30 at night, you're in bed, the lights are off, you tell yourself you're just checking something quickly, but 20 minutes later, you're deep into stock charts from 2013. You're looking at what Nvidia was trading at before it exploded. You're staring at Amazon's chart from the early 2000s. You zoom out, you zoom in, you imagine what it must have felt like to buy back then. And then that little voice shows up. What if I missed it? What if the next trillion-dollar company is already out there and I just can't see it yet? Honestly, I've had that exact thought more times than I can count. My name is Tim, and I spend way too much time thinking about money, investing, and why some people seem to catch massive wealth waves early, while the rest of us are kind of just standing on the shore watching. And the more I've studied markets, companies, and human psychology, the more I've realized something slightly uncomfortable. The next trillion-dollar stock probably won't look obvious at first. It won't feel safe, it won't feel consensus, it might even feel boring or overhyped or misunderstood. And that's what makes this interesting. Because today, we're going to explore what it actually takes to become a trillion-dollar company. Not just the hype version, not the "this stock could 100x" YouTube thumbnail version. I mean structurally, economically, psychologically, what needs to be true. We'll break down what past trillion-dollar companies had in common. We'll look at the types of industries that can realistically support trillion-dollar valuations. We'll talk about timing, narratives, risk, and how you, as an individual investor, can position yourself before 2030. And by the end of this, you're not just going to have a stock ticker in your head. You're going to have a framework. Because honestly, frameworks build wealth, not guesses. Let's start with something simple. What does it actually mean to become a trillion-dollar company?
When people hear trillion-dollar stock, they think big. Big buildings, big factories, massive revenue. But here's the thing. Trillion-dollar companies aren't just big, they're dominant. Think about the companies that have already crossed that threshold. Apple, Microsoft, Amazon, Alphabet, Nvidia. They don't just participate in industries, they shape them. Apple doesn't just sell phones, it owns an ecosystem. Microsoft doesn't just sell software, it controls infrastructure. Amazon didn't just build an online store, it rewired retail and cloud computing. A trillion-dollar company has to do three things: operate in a massive addressable market, capture a disproportionate share of that market, build some kind of moat that makes it extremely difficult to compete. Let me give you a simple example. Imagine a company that sells high-end bicycles. It's the best in the world, premium quality, incredible margins, everyone loves it. But the total global high-end bicycle market is, let's say, $30 billion. Even if they dominate that space, even if they own half of it, they're not reaching a trillion-dollar valuation. The ceiling isn't high enough. So the first question you should ask when evaluating the next trillion-dollar stock is not, is this company good? It's, is the pond big enough? Because if the pond isn't an ocean, it doesn't matter how strong the swimmer is. Actionable takeaway. When you research companies, look at total addressable market, TAM. If the market itself can't realistically grow into the hundreds of billions or trillions, the math probably won't work. And this right here eliminates a lot of hype. Every trillion-dollar company rides a wave. Apple rode mobile computing. Amazon rode e-commerce and cloud. Microsoft rode personal computing and enterprise software. Nvidia rode AI acceleration and GPUs. Notice a pattern? They didn't invent small upgrades. They were central to paradigm shifts. Now let's think about what kinds of waves could realistically produce the next trillion-dollar company before 2030. Artificial intelligence is the obvious one, but not just AI as a buzzword. We're talking about AI infrastructure, enterprise integration, automation at scale. Then there's energy transformation, renewables, battery storage, grid modernization. There's biotech, gene editing, personalized medicine. there's cybersecurity, there's space infrastructure, there's robotics. But here's where most investors mess up. They chase the theme. They don't evaluate the execution. In 1999, everyone knew the internet was the future. That didn't mean every dot-com stock became Amazon. The wave matters, but the surfboard matters more. Actionable takeaway. When you're evaluating a potential trillion-dollar candidate, ask yourself, is this company positioned at the center of a transformational shift, or is it just adjacent to it? Because adjacency doesn't build empires.
This part is boring, but it's important. Let's say you find a company growing revenue at 40% per year. Sounds amazing, right? But if their margins are razor thin, if they constantly dilute shareholders, if they rely on debt to survive, that growth can collapse under its own weight. A trillion-dollar company needs operating leverage. What does that mean in plain English? It means the company becomes more profitable as it scales. Software companies are great examples of this. Once the product is built, selling it to 1 million users instead of 100,000 doesn't increase costs proportionally. That's why companies like Microsoft and NVIDIA can scale so explosively. Contrast that with, say, airlines. More customers mean more planes, more fuel, more staff. Scaling is expensive. So if you're looking for the next trillion-dollar stock, look at gross margins, operating margins, free cash flow trends. I know this isn't flashy, but trillion-dollar companies generate absurd amounts of cash. They don't just grow, they compound. Personal reflection here. I used to ignore cash flow. I'd get excited about growth charts, but once I started paying attention to how much actual money a company kept after expenses, my investing lens changed completely. Actionable takeaway. Don't just look at revenue growth, look at whether the company turns growth into durable cash. Let's shift gears. Even if you identify a future trillion-dollar company today, could you actually hold it? This is where it gets uncomfortable. Imagine you buy a stock at $50. It doubles to $100 in 2 years. You feel like a genius. Then it drops 40%. Suddenly, you're back near your original cost basis. Do you hold? Do you sell? Do you panic? Most people don't miss trillion-dollar stocks because they can't identify them. They miss them because they can't hold through volatility. Look at Amazon's history. It dropped over 90% during the dot-com crash. 90%. Can you imagine holding through that? It's easy to say yes in hindsight, much harder when your portfolio is bleeding. Actionable takeaway. Position sizing matters. If you're chasing the next trillion-dollar stock, don't bet your entire portfolio. Allocate a percentage you can emotionally tolerate. Because the journey to $1 trillion is never smooth, and if you can't survive the dips, you won't be there for the climb. Markets run on stories, not lies, not fantasy, stories. NVIDIA's story wasn't just "we make chips," it was "we power the AI revolution." Tesla's story wasn't just "we sell cars," it was "we accelerate the world's transition to sustainable energy." A trillion-dollar company needs a narrative that investors, institutions, and customers can believe in for a decade because capital flows toward belief. But here's the caution. Narratives can detach from fundamentals. We've seen that before. So the key question becomes, is the story supported by actual execution? Actionable takeaway. Separate narrative from numbers. If both are aligned, that's powerful. If the story is huge but the numbers are weak, be careful.
Now we get to the big question. By 2030, we're only a few years away. So realistically, the next trillion-dollar company probably already exists. It's unlikely to be a tiny startup. The math is brutal. To reach $1 trillion in 4 to 5 years, a company likely needs to already be worth hundreds of billions. That narrows the field dramatically. We're probably looking at major AI infrastructure players, advanced semiconductor firms, large cloud or enterprise software companies, possibly a dominant renewable energy platform. But again, don't focus on a single ticker. Focus on the pattern. Massive TAM, structural tailwinds, strong margins, compelling narrative, ability to scale profitably. If you find those 5 elements aligned, you're looking at a legitimate candidate. This is the real question, right? Okay, Tim, cool framework, but should I buy? Here's the honest answer. If you're looking for certainty, don't. There is no guaranteed trillion-dollar stock. But if you're building a diversified portfolio and you allocate a portion to high-quality, high-upside companies positioned in transformational industries, you dramatically increase your odds of participating in massive long-term growth. The goal isn't to perfectly predict the next trillion-dollar stock. The goal is to be positioned when one emerges, because wealth, more often than not, comes from exposure, not perfection. Let's zoom out. The next trillion-dollar company will not just be a good investment. It will likely represent a shift in how we live, work, or interact with technology. And the deeper lesson here isn't about chasing hype. It's about learning how to think, how to evaluate scale, how to assess durability, how to manage your psychology, how to align narrative with numbers. Because if you can do that, not just once, but consistently, you don't need to perfectly identify the next trillion-dollar stock. You'll naturally gravitate toward companies that build real, lasting value. And maybe, just maybe, one of them will cross that trillion-dollar mark before 2030. But even if it doesn't, you'll still be miles ahead of where you started. And honestly, that's the kind of edge that compounds for decades.
And let me say one more thing that people don't talk about enough. A trillion-dollar outcome doesn't require you to catch the exact bottom. That's this weird fantasy we all have, that we're supposed to discover a company when it's tiny, unknown, and trading at $7 a share. In reality, most trillion-dollar companies were already big, already visible, already expensive, according to someone. Apple looked expensive. Amazon looked expensive. Nvidia looked expensive, over and over again. Sometimes the opportunity isn't about finding something undiscovered. It's about recognizing something misunderstood and being early to conviction, not early to existence. And honestly, that's a much more realistic game to play. Another thing to remember is time compression. As technology accelerates, companies scale faster than they used to. It took decades for some giants to reach massive valuations. Now, entire industries can reshape themselves in 5 to 7 years. Cloud computing exploded. AI adoption is moving at a pace that feels almost unnatural. So when we ask, can this hit $1 trillion by 2030? We're really asking, is this riding an exponential curve? Linear growth won't get you there in time, but exponential growth, that's a different story. But here's the part that requires maturity as an investor. You don't need to go all in on one prediction. You can build what I like to think of as an asymmetric basket, a few high-conviction companies positioned in transformative spaces. If one becomes the trillion-dollar breakout, it meaningfully impacts your portfolio. If 2 or 3 execute well, even better. And if one fails, it doesn't destroy you. This is how professionals think, not in lottery tickets, but in probability-weighted outcomes. There's also something deeper going on here. When you study trillion-dollar companies, you start realizing they shape culture. They alter behavior. They become infrastructure. That's the real tell. If a company is becoming invisible, in the sense that it's so integrated into daily life that you stop noticing it, that's powerful. Cloud infrastructure, mobile operating systems, payment rails. The companies behind those layers quietly accumulate dominance while everyone debates headlines. So maybe ask yourself, what do you use every day that feels indispensable? What would genuinely disrupt your routine if it disappeared tomorrow? And let's talk about patience for a second, because patience is boring. It doesn't trend, it doesn't go viral. But the investors who catch trillion-dollar runs usually sit through years of doubt, flat stock prices, critics, overvalued headlines. If you need constant excitement, you'll probably trade around your position too much. There's a weird kind of emotional discipline required here, the ability to let a thesis breathe, to check the fundamentals, not the daily price. Also, and this is important, you don't measure success solely by whether a company hits $1 trillion. That's just a symbolic milestone.
The real objective is participating in businesses that compound earnings at high rates for long periods of time. If a company doubles, then doubles again, then doubles again, whether it hits $1 trillion or stalls at $600 million almost becomes secondary. The process of compounding is what builds wealth. The headline valuation is just the trophy. So maybe the better question isn't what's the next $1 trillion stock, it's am I building the skill set to recognize durable exponential growth early and hold it long enough to matter? Because if you can answer yes to that, you're not just chasing a milestone, you're building an investing philosophy. And that, honestly, is worth a lot more than a single prediction.